Hi there guys, welcome back to the channel. I hope everything's good. If you're new to this channel, it's just me going over my portfolio as a dividend investor. I'm just getting started. I've been going for about 2 months now, so just want to keep track doing these YouTube videos, show you the ups and downs, just show you where I'm getting along here so you can follow along, maybe learn something. And at the end of this video, I'm going to put a video at the end of Warren Buffett explaining what he would do if he had a small amount of capital to invest. So stick around to the end of the video to see that. Let's jump into it. Okay, so here we have my portfolio here. It's currently sitting at £4,087. Return of 3.79%, which is not bad considering. This week has been up and down, honestly, like a kangaroo. Swear. If we go over, you can see these are normally my investments that I've been putting in, that you see these massive spikes. You can see it's coming along nicely. If we go to 3 months, you see I've been building up and building up and building up. So it's been going pretty well at the moment. These are my investments here. If you want to have a look, some of these: Apple, AT&T I've been buying a lot more of just because I kind of like the price that they're sitting at. We've got Chevron. See, Cineworld's still sitting there. I'm sitting with, at the moment, I've got 157 shares. So hopefully when everything goes back to normal, that'll definitely be profitable. Most of these are sitting in the red at the moment. Johnson & Johnson, everybody's favorite. Kraft, they actually just paid me a dividend. So we'll go into the dividends that I've received so far since I've started to date. So as you can see down the bottom there, I've made £6.21p from dividends just since I've started over the past 3 months that I've been investing. So that I've invested that straight back in, reinvested it. I'm not taking anything out. The goal of this is to make any dividends I get is to reinvest. That's what you need to do. You need to keep reinvesting so it creates that snowball effect, so you make the most you can from the dividend that you get. There's no point taking it out. You won't compound interest that way. So my goal at the moment is try to invest £50 a week. So that's £200 a month into this, reinvest all dividends, and see how it goes from there. Maybe try and increase it to £100 a week. We'll see how it goes. Obviously, just recently Wells Fargo cut their dividends, so that's another thing you need to watch out for. Some of these companies might cut their dividends, especially if you had a lot of money invested. Say for example, I was sitting with 200 shares of Wells Fargo and I was expecting that dividend and it got cut. It would seriously affect my portfolio. So you need to look out for these things if these things are coming up on the horizon. Yeah, going back into AT&T here, ticker symbol T. I really wanted to get more shares of it when it was sitting at $29. It's up to $30.15 now. I was trying to get it up to 30 shares when it was at $29, so I'll wait to see if there's another dip before I buy more. Yeah guys, so that mostly covers everything. Thanks for tuning in. Hopefully I keep these up to date. I'm trying to get one out a week, so subscribe if you can so you keep up to date. So now you're going to see a video of Warren Buffett explaining what he would do if he had a small amount of capital. Also check out the links in the description below. If you're new to investing, you could get a free share. I could get a free share worth up to £100, so we'll both be happy. So yeah guys, thanks for tuning in. See you next time. Peace.
Time with us today.
Thank you.
My question is, you've repeatedly said that you see many wonderful stock ideas, but can't invest because they're too small. Given that many in the audience today have a lower dollar investment threshold...
Do these stocks have names?
Well said.
Well, the answer to that is that we don't look anymore. We assume that there are a reasonable number of opportunities as you work with smaller amounts of capital, because it's always been true. I mean, it was over the years as I looked at things, clearly you run into companies that are less followed as you get smaller, and there's more chances for inefficiency when you're dealing with something where you can buy $100,000 worth of it in a month rather than 100 million. But that is not because I'm carrying around in my head the names of 25 companies that we could put 100,000 in. I just don't look at that universe anymore. Sometimes people send me annual reports or get letters from managers, and they say, well, you know, I've got this wonderful thing, and I usually know ahead of time, but I mean, I would first look at the size, and if the size isn't right, and it isn't going to be virtually any time, I don't look any further, because there's just no time to be looking at all kinds of smaller opportunities. I do think if you're working with very small amounts of money that there almost always are some significant inefficiency someplace to find things that I've mentioned to some people. When I started out, I actually went through all of the Moody's manuals and the Standard & Poor's manuals page by page, and you could, and you know, it's probably 20,000 pages, but there were a lot of things that popped out, and none of them were in any brokerage report or anything of the sort. They were just plain overlooked, and you could find out about them, but nobody was going to tell you about them. And my guess is that continues to be true, but not on anything like the scale it was then. Charlie?
Well, I can remember when you bought one membership in some duck club that had oil under it when you were young.
Yeah, there was a company called Atlas.
When you get down to one duck club membership, well, you're really scavenging for cigar butts. But
not a bad cigar butt. There were 98 shares outstanding. It was the Delta Duck Club, and the Delta Duck Club was founded by 100 guys who put in $50 each, except two fellows didn't pay. So there were only 98 shares outstanding. They bought a piece of land down in Louisiana, and one time somebody shot downward instead of upward, and oil and gas started spewing forth out of the ground. So they renamed it Atlid, which is Delta spelled backwards, which was sort of illustrated the sophistication of this group. And a few years later, they were taking, at $3 a barrel oil, they were taking about $1 million a year in royalties out of the place, and the stock was selling at $29,000 a share, and it was earning $10,000 a share. No, it was earning about $7,000 a share after tax, about $11,000 pre-tax, and it had about $20,000 a share in cash, and it was a long-lived field. So, you know, I use that sometimes as an example of efficient markets, because somebody called me and offered me a share of it, and those things, you know, is that an efficient market or not? You know, $29,000 for $20,000 of cash plus $11,000